Again, it's about imposing your will onto the markets to say, I want to make 10% every month, because it doesn't work that way. The market dictates how much money you're going to make. And I always say it's a bit like buses. They all come at once. And so you will have these rich seams over the course of 12 months. You'll have your rich periods and then you'll have your stagnant periods. And it happens really for most traders that I always say to people, you make your money in 8 out of 12 months, let's say. And the rest of the time, you either maybe having some losing patches or flat patches or whatever it might be.
I was always taught, be really, really happy to take small losses.
Yeah.
Okay, and again, the Japanese would say basically, be prepared to lose a hook and a number of hooks, because one day you'll catch the giant salmon.
Yeah, exactly. But trying to educate people into that, because they forget, we all as human beings forget those big trades will come along, but we have to wait for them. And so what we do remember is all that pain that we take. Sometimes it's very difficult to read. Just take a step back until they come back to you, because they always do. They'll always come back to you, and whatever your style of trading may be, whether you're a trend-based trader, you're a counter trend, whatever it might be, the patterns will come back for you, but just take a step back when they're not quite doing what you want them to.
And I don't care how misguided you are, everybody eventually plays pocket aces. And the most important part is, if you remove the P&L box, those pocket aces really turn out to something. So for me, when I go on a really big hot streak, I'm not impressed, because I expect to make money. Obviously, every trade that I put on, I feel like I'm going to make money. I feel there's certain days I can walk on water. And then there's days I can't get anything going. You know what I mean? And those days you just say to yourself, you know what? It just wasn't meant to be. You don't need to keep on piling on positions. I could figure out within the first 30 minutes if I'm going to have value in the day. So if I'm wrong in the first couple of trades, what's the point of me keep on piling it on? Wait for premium setups, wait for premium hands. No matter how you trade, get that green light, man. Get that wind at your back, and when you get it, you got to push really hard, because it doesn't last long. Okay, and stay up, guys. You'll be all right. You'll be all right.
You get to the casino tonight, lads. You go to the roulette wheel. It's a 50% game. Equal number of blacks and reds. And there's a little white ball, which is GT's cut. That's the house edge. Okay. And you look at the scoreboard down at the end, and you're going to see long runs of red and long runs of black. Those clusters are real. And it's this clustering effect that makes playing the game so difficult, because you get long runs of good trades and long runs, unfortunately, of bad ones, where you feel like something that's under your shoe. Okay. Now, the first objective, ladies and gentlemen, is to live through the clusters arithmetically, that you don't go broke in them. Okay?
If your hit rate comes down towards 50%, and many trend-following traders would sell their granny for a 50% system. Most trend-following systems are less than 50%. That in 4 trades, you're going to have 2 bad ones in a row. Now, most people will give up after 2 bad ones in a row, but it gets worse. What's the probability of 3 bad ones in a row?
I don't know.
A half times a half times a half.
More.
Okay? Which means that you get a cluster of 3 bad ones in a row every 8 trades. You get a cluster of 4 bad ones in a row every 16 trades, and you get a cluster of 5 bad ones in a row every 32 trades. 5 bad ones in a row. How good will you be in executing your system with precision after 5 losses in a row? Okay, and that's the challenge in the short-term markets. As the hit rate comes down, then these ghastly clusters of bad luck start. And of course, a cluster of good luck, you can have a cluster of good luck as well.
But if you can come to me and say, even if you're trading for me, and you came to me and said, look, I lost $5,000 this month, but here's my log, and I see that you have essentially followed your plan for the most part, and you have very few errors, I would say, great job, keep going. Because it just means that you're executing your plan, but your plan does not have an edge for that particular period of time. And every edge disappears and reappears and disappears and reappears. There are times when the market's in balance, there are times when the market's trending, and you may be someone who has a plan that has more emphasis on balance than trend. So you will lose. It's kind of like an automated trading system. Everybody has an edge for a period, and everybody has a drawdown for a period. It's just the nature of the business. Does that make sense?
Absolutely. No, that was an awesome answer. I really liked how you explained that.
And I would say that the one thing that really held me back was the inability to see the big picture. The inability to see that I'm trying to make a yearly return. Because when you first start trading, all you can see is the trade in front of your face. Mm-hmm. You can't even see to the end of the week. All you can see is the trade you're in right now, and you're looking at your P&L, and that's all you can see is that P&L right now. And I remember over the years, I started to recognize that who cares about my P&L today? I just care about it for the week. Because I'd had plenty of times where I was down on Monday and Tuesday, and then by the end of the week, I ended up having a great week. So I started to realize, what am I stressing out about over daily movements? And then I started looking at a week basis. And then I said, you know what? Look, I've had plenty of bad weeks. And you know what? I bounced back from them just fine, as long as I just keep it going. So I don't even care about weeks anymore. I'm looking at months. And then, so maybe 3 or 4 years into this, I was really just focused on making a good monthly return. And now it's gone to quarters, to years. Now I'm looking at, decades, and looking at, passing stuff down onto to my kids, not just money, but teaching them how to do this and teaching them how to manage it. But at first, all I could see was the trade I was in front of me. And that's a really difficult way to make it in this business. You've got to have that perspective.
A lot of times when traders trade, they are actually on the path to success. But along the way, at this path to success, there will be bumps, there will be failures, there will be losses. And a lot of them drop out along the way. But what they fail to know that they are actually on the right path to success.
And then this is probably your profitability. Okay, so year one, when you go, for example, it will be kind of like this, like maybe up. There'll be years, there'll be months whereby you drop, it goes up, you drop, it goes up, you drop, it goes up, you drop, it goes up. So overall, you are in a good shape. You can't expect this like this. Maybe if you zoom real outwards, maybe if this is scale of not say 5 years, maybe the scale of 20 years, then maybe the fluctuations in between is actually very, very minimal, right? And this is considered a fantastic strategy by all means. So, but what happens is a lot of traders, when they trade, when they look at this, they'll be wondering, let's say my chart for that month, instead of it going up, it is actually a down. And then I may think that, hey, this strategy isn't working for me. But what you may not realize is that your trade in that 1 month, maybe 10 trade, belongs to the chart over here. Right? There will definitely be losses in your trading. Definitely. There will be months of wins and there will be months of losses. But as long as your system is right, when you backtest right in the large enough scale, you will be confident to know that at times of losses, when in that month your chart is like this, you are actually only in scenarios over here, over here, over here, and here. So there's nothing to fret. There will be months whereby you have wins like this. And then you think that, wow, this is a fantastic system. But there will be months where your system will go like this and you will go down. And then you may think that, man, there is something wrong with this system. I don't think I can trade with this system anymore. I need to get out quick. I need to start finding the next holy grail. Right? No. What you need to look at is the law of large numbers. Run your back test to have a large enough numbers such that you know that, hey, this works in the long run. Right? If this works in the long run, what I'm facing now is the dips of the falls in the overall larger picture of my growth chart. So therefore, you need not be too affected by this. And then, wow, when the market stop, when you start losing your money, you start making tweaks to your system, you start editing this, you start probably trying new stuff, etc. No, stay calm. Because trust your system that this works in the long run. A lot of traders, what happens is they fall into this kind of potholes. And that what they may not realize is that while you are actually on the path to success, while you are zooming in on this kind of losses, you decided to stop trading, you decided that this system is not for you decided this strategy is not for you, and then you go on looking for the next silvery, blinking, twinkling stuff. The game is about probability in large numbers. You are in the spot of the dips. You are in the spot of the dips where you are zooming in at the dips and then you are looking at the chart, right? And then you see your money going down. But when you run through the law of large numbers in 1, 2, 3, 4, 5, when you gain confidence in your system, this doesn't mean anything to you. You'll be less emotional on this kind of losses because you know at the end of the day, the system will run itself out. Cool? Yeah? This is the mentality of the big boys. This is the mentality of the pro trader. Do have that kind of mentality. It's just that these humps are the one that make you think twice.
Traders have three phases. They're in ebb stage where everything they do is wrong. They're in flow stage where everything they do is right, and then you just go back to normal. You have your normal wins and losses. So when you're in ebb stage, like I've been in ebb stage since about the middle of January, hopefully break out now, but we won't know for sure until the end of the month. But when you're in ebb stage, you need to look back through your journals and see, okay, do I start reducing my exposure? What trades are not working for me that used to really work, they're not working now? And what I found, for example, in my case, that I've got to reduce the time frame because there's just no, I trade the currencies mainly at the moment. There's no follow through. You know, you get a big, look, euro dollar. Yeah. We had the movement up when the non-farm payrolls came out. Wow, you looked at that, looked like it's going to the moon, right? Next day, all the way down again. Oh, it's going to crash back up again.
Yeah.
If you were trading the system and hit this streak of losses, how would you respond? I think it depends. If you were flying blind with no basis for long-term confidence, you'd probably shut down your trading. But if you had reliable test results, you'd know that a 6-loss streak for this strategy is statistically reasonable. It doesn't mean it's a bad system. With a win rate just above 50%, you'd expect winners and losers to be somewhat evenly distributed. That's not the case. Trades 14 through 19 are consecutive winners. Trades 58 to 63 show 6 losses in a row. These streaks are normal, and they mean that short-term performance might not be representative of overall performance. If we judged this system on just 10 trades, we would have seen a win rate of 60%. And if our 10-trade testing started later, say this point, it would have generated just a 40% win rate. Both results are distorted because they're based on a small sample size. The law of large numbers tells us that as the number of occurrences increases, results approach the overall performance. This is how casinos operate. For any single deal of cards, they can't predict if they'll win or lose money. But over many repeated deals, the earnings become quite predictable. It's the same thing in trading. The outcome of any one trade is more or less random. But the more trades you look at, the more credible the results.
Would you be upset with 11 losing trades in a row? Well, I have no doubt that you may suffer some discomfort. I don't like losing 11 times in a row. But the fact of the matter is that even trading a system with a 70% hit rate, you will experience clusters of bad trades and clusters of good trades. And no one knows when those clusters will appear. They'll come out of nowhere. You will feel like you can't go wrong. You will feel like that every single trade that you place is bound to be a winner. But the opposite will also happen. The money is pouring into your trading account, or they may leave your trading account faster than you like to. But that is the nature of a cluster. You hit a cluster of bad trades and you begin to question the system. You wonder if you're cut out for trading. You wonder if you're cut out for this business. Have you got what it takes? Is the system no longer working? Is it you who's the problem? And I say to you, relax. That is the nature of this game. You have to learn to deal with these clusters. Trades are randomly distributed. They don't come in one win, one loss, one win, one loss. You can't predict in advance if the next trade is a winning trade or a losing trade. And you have to learn to accept that in the outcome of one single trade, there is complete randomness. But the good news is that over the course of hundreds of trades, there is statistical order. I can't emphasize enough how important this concept is. Most traders will grow disheartened with their system after a string of losses. But if they only knew that this is perfectly normal, they probably would have stuck with their system in the first place. Instead, they abandon their method and they try something else. And that's a real shame, because all that really happened was that they hit a cluster of bad trades.
And then all that is required is a willingness to bet heavily when the odds are extremely favorable, using resources available as a result of prudence and patience in the past. Okay? There's a lot of stuff in this quote. Let's read it backwards. Okay? He said, using resources available as a result of prudence and patience. This means by only taking high-quality setups, not the so-so ones, not the mediocre ones, just the high-quality ones, you'll have money available when a good one comes along. Okay? He said, a willingness to bet heavily when the odds are extremely favorable. Okay? So when you bet, so when you get one of those really good ones, you don't just take an average position, you size up. Okay? Not at once. Okay? Your initial position can be a starter position, but as the trade goes in your favor, you could push it a little bit and add to your position. You press the accelerator. Okay? And finally, he says, a few major opportunities. Okay? He didn't say constantly trade and have more winners than losers.
Handling winning and losing streaks. Now, if you look below, you will see a typical equity curve of a trader over 100 trades. And what you notice is, for example, you may start with $10,000 over here and grow your capital over time to say $15,000 or $20,000 over 100 trades. And if you take a look at how your capital grows, it doesn't go up in a straight line, right? It goes up and down just like the price of a stock. So remember that the overall outcome of your trading journey will not unfold linearly. It's not a straight line going up. So do not look at the trading outcomes of a certain small period and extrapolate them into the future. What does that mean? So it means that, for example, if you happen to go through a losing streak over here, a series of losses like 5 or 10 losses in a row over here, or over here, and over here, don't get freaked out. Some people, after they get 10 losses, they might go, oh my God, if this happens, keeps going on, I'm going to lose everything. And they extrapolate that to the future. At the same time, if you get a winning streak over here, where you have a series of 10 or 15 wins, don't get too excited and get carried away and say, my God, if I keep this up, I'm going to be a millionaire next week. All right? And they get too excited. So in the long run, winning and losing streaks tend to even out each other. And the long run of distribution of wins and losses are what makes us profitable. Long run performance has little or nothing to do with the luck factor. So I can tell you that in the short term, when you trade, it's a bit of luck, where you may get 5 wins in a row or some bad luck, 4 losses in a row. But in the long term, it's got nothing to do with luck, because the bad and good luck will tend to even off each other. And in the long term, it's all about statistics and probability that will guarantee your success. Losing traders tend to focus on their account balance instead of following the system. Right? They keep looking at their balance, or my money's going up, it's going down. And when that happens, you get emotional and you don't follow the system.
But I do truly believe, as long as you don't prostitute your process, and I don't care what your process is, you could be trading, credit default swaps, you could be trading E-mini, whatever it is, whatever your trading is, I believe that you will have periods of dullness, right? You'll have periods of, you'll go on a monster run, and you'll have periods that, you know what, you can't get out of your own way. It's called the buzzsaw. Every single trader, for the exception of social media, every single trader that puts on risk, okay, is going to run into a buzzsaw. It's inevitable. The more screen time you get, okay, the more screen time you have, and the more, more hands that the market gives you, eventually you're going to run into a buzzsaw. There's been days, and I swear, like the day is long, every single thing that I've done for that one day, whatever random day it is throughout my career, it's been wrong. I buy the stock at the top of the channel, I get hit with a reload seller. I short the stock at the bottom of the channel, I get hit with a reload buyer. There's nothing I can do to make money that day, right? And I shake it off. There's nothing you can do. Because again, sometimes you'll get that 2-5 offsuit, and there's no way you could play that hand. The only thing different about that day is, instead of me keep on compounding the problem and saying to myself, well, I'm only down X, but you know what? X could turn into XYZ. So you don't want to turn a Band-Aid, right? You don't want to turn a paper cut into a severed head. So what I do every single month, I want to make sure, yes, my losing days, I'll have losing days, but I want to make sure, and this is where the responsibility kicks in, I want to make sure I didn't take that Band-Aid, right? That Band-Aid with all these paper cuts and turn it into a severed head. So if I see a number, okay, if I see a number that jumps at me on my sheets, I know there was something wrong that day. Whether it was something I was holding overnight, obviously there's bad news that comes out all the time. Your stock could get downgraded. FDA, I try not to hold, biotechs overnight, but you never know what comes out overnight. Like a couple of years ago, I was long Intrepid Potash, IPI, and some stupid news came out, the whole sector, the whole group was down 25% the next day. Okay, it's part of the business. So that kind of day would obviously stand out for me. But most important thing, what I do to kind of look back at a trading month, I say to myself, well, if I made money 18 out of 22 days, 19 out of 22 days, whatever the number is, I want to make sure the days that I didn't make money, okay, or caught a buzzsaw, okay, because again, every single trader, no matter who you are, will catch that buzzsaw. I want to make sure first and foremost that, again, I can make back that day, whether it's the next trade, next 2 trades, the next day. I just don't want to make sure I put myself in a situation being stubborn or pig-headed or just being just an idiot, okay? Because again, Meyer Hoffman used to tell me all the time, the greatest thing you can do is don't trade like a putz. That's it. Don't trade like a putz. The greatest advice he ever gave me, don't trade like a putz. So as long as I never traded like a putz and those numbers that are down days are manageable, I'm fine with it. Because again, that's the cost of doing business. You can't escape. There's nothing you can do. So I try to make sure those days don't jump off the page. I want to make sure those numbers are not exaggerated to what I normally take on my days to the downside. I try to correct it if there possibly is. If there's just one of those days that, you know what, ish happens, right? We say it all the time, ish happens, right? If it's one of those ish happens days, then you know what, I'm fine with it. Rinse, repeat, go into the next month. Short memory. It's just part of the cost of doing business. Next trade, next trade, next trade.
One of the nice things about this business is that the bottom line really is the bottom line. And you need to understand that even with a good system, you're going to have strings of really good and really bad performance. But you need to look and to monitor that performance and to basically to make sure it's stable. For instance, as we were talking before the interview started, markets have been difficult for the past few months. And I know that I will have strings of winning trades and I will have strings of losing trades. And, there was a period last year, particularly in currencies, when it was like I couldn't do anything wrong. Every time I looked at a market, it was a winning trade, and some of these trades went on for months and months and months. And when you're doing that well, you're not really that good. And you also, you'll go through periods where you'll have lots and lots of losing trades, and you're not that bad. And if it really takes the emotional charge away, your job is to simply execute the trades, to execute the system with complete consistency and discipline. And then the other side of consistency. So you have consistency on the side of your behavior, which is critical. And then you have consistency on the side of your results. And you just have to know your results are not going to be as consistent as you wished. And you can make them less consistent by being less consistent with your behavior. But, there is definitely this all ties together, right? This goes back to understanding how thin those statistical edges are and the type of it is possible to make consistent money in the market, but what does that consistent money look like? Well, most mature traders know that that definition of consistency is not what they thought it was going to be when they started trading. It does not mean that your equity curve is a straight line. It doesn't mean that your trading account is an ATM machine that always and reliably produces money. But over the long run, consistency certainly is achievable.
Switching strategies or searching for a strategy that's working right now was one of the biggest mistakes that I personally made. I believe that everything works sometimes. Nothing works all the time. When your strategy is working, I've always believed, not always, but I believe that you need to keep trading and trade more aggressively. And when things aren't working, you need to just trade less or don't trade at all. Don't search for a new strategy every time your strategy is not working.
So it was hard and it took a while. And now I've been through all the cycles. So I know when my strategy is likely going to struggle a little bit versus when it should really be, knocking it out of the park. And then I can use my sizing in that according to that. And there's always little variations in it. So I always say the market's building a roller coaster that we don't know the exact configuration of the roller coaster, but it's always going to be up, downs, and cycles. So just go with it that way.
Now, when I take a loss, I could care less because I understand that this is all a numbers game. If I make 10 trades, I know I'm going to lose 4 or 5 of them. I don't even care anymore. I actually go into a trade fully knowing that it's probably going to be one of the losers. You're going to find out that sometimes it comes back down in a trade that you did have as a winner, turns into a break even. You have to be okay with that because you have to understand this is not about one trade. This is about 10 trades. Got it? Because what's going to happen is you're going to get that one. And let's just say there's just one. There's one runner that runs all the way up to 112. But just think about that. $20,000 gain and you never had more than $500 at risk. Now that's only going to happen on 1 out of 10, 1 out of 15. But it will happen. Wow. So, you lose money on 5, you break even on 1 or 2, you make, a couple $100 on the ones that are okay, and then on 1 out of 10, let's not use the 20,000, but let's say you make 4,000. All of a sudden, the math works. And the math works now. You took $500 losses on 4 or 5. You made maybe, $500 on some winning ones, and then on one you made 4,000. You're profitable, and not just profitable. You're very profitable.
Yeah, for sure.
6 now the highest break of the match. There will be plenty more big breaks to come.
Ronnie would be disappointed. It might be a wee bit. These players are so experienced. They know there's a long way to go. But having a lead is nice.
Another thing was composure under pressure. Watching guys have big down days and not seeing it rattle their confidence at all. Seeing them be able to walk up the office, head held high with a big smile on their face. And you knew for a fact that the guy who was down a massive amount on the day, like we're talking tens of thousands of pounds. And again, it drilled into you that right mindset.
You're going to have lots of losers, you're going to have some gainers, and you're going to have 1 or 2 or 3 very, very large gainers. And those are the ones you have to be in on.